Hey guys, it's Ryan with West River Realty. I'm here with Trent Gonzalez from Affiliated Mortgage. We're talking about mortgages today, and I have a lot of clients coming to me concerned about the interest rates, with questions about the interest rates. So I thought I'd just sit down with Trent and video the whole interaction. So Trent, thanks for being here.
Yeah, absolutely.
I appreciate it. So what are you seeing with the interest rates as they stand right now? Like how are things going? What are you hearing from people as they're getting mortgages? I mean, you're doing this all day.
Okay. The one thing I would like to start off with, just in the financial world, and mortgages are nothing special. It all goes in cycles. It's going to go up, it's going to go down. Um, yes, rates have risen since last year, or even this spring. They are going to go up. They're expected to go up. One thing that's kind of interesting with interest rates is when you hear the Fed is going to raise interest rates, everybody goes crazy, and then they expect them to go up. But a lot of times, by the time that comes out and decisions are made, there's enough uproar over it or enough information that people have already raised their rates.
Yeah.
One big thing that, and I'm hearing it too, somebody I might have worked with, and they looked at a 4% interest and now they're more at a 5% interest. Like, well, I think I'm going to wait. I'm going to wait to
Mhm.
buy because I want to wait for the interest rates to go down, which in theory is a good idea. Yes, be concerned about your money, be concerned about what you're paying in interest because nobody wants to pay a bank more than they have to.
Yeah.
But the problem with that is if you're going to wait for the perfect interest rate, you're never going to buy a house.
Sure.
You never know when the market or rates are done going up until you're on the other side of it and they're going down. And you probably see the same thing with house sales prices,
Yeah.
you know.
Yeah. I mean, we're dealing with it right now with a lot of people that we're trying to, specifically investor clients that we're trying to time the market
Hmm.
to sell off a portfolio at the height. And then, now we see what's happening now and they're going, oh, I have 5 properties to sell. I was going to try to sell at the top. And it was like, well, that was, when we started talking, when we were talking in spring, you should have listed.
Yep.
And now it's just a matter of just like, hey, let's get it now and recoup as it's still coming down because otherwise you're going to time it the opposite way.
Yep.
They're going
Absolutely.
to see the bottom and then start making those decisions because that it feels like there's a lot of fear of in those situations. They don't want to, it's like a FOMO type thing. They don't want
Yep.
to miss out.
Absolutely. And again, the problem with that, and you will see it in sales prices on houses, you don't know it's the top until you're already down. You don't know it's the bottom until you're already going up.
Yeah.
Statistically, in the mortgage world, you're not going to be in the same mortgage that you're in today 3 to 5 years from now.
Okay.
That's not saying that you're going to move. Maybe rates dropped further than what they were when you bought.
Sure.
Maybe you've got a little bit of equity in your house and you want to do
Hmm.
a remodel and pull some of that cash out. But most people will refinance or be in a different mortgage within 3 to 5 years from when they started. There's kind of a saying that goes around in the mortgage world as far as lenders go: marry the house, date the rate.
Yeah.
Yeah, be in love with your house, but don't be so tied onto that interest rate. And the reason I say that is because the market always is going to be going up and going down. If you're waiting for the perfect time, you might get the perfect rate, but maybe it's a seller's market and the prices have already gone up.
Sure.
So your bang for your buck is no more than what it would have been if you had a higher interest rate, because the same house that's 250,000 now is selling for 300,000. Yeah, you're getting a little less on interest rate, but you're still getting the same house.
Sure.
Your money's not being stretched any further. But it is worth shopping rate. It is worth keeping an eye on them, but don't let that be the decider,
Okay.
because you'll never buy a house if you do.
Okay. Yeah. I mean, I think that's really good advice. I know for me, where I keep having people who are now slowing down because of this rate
Hmm.
change, and I like this idea of would you say marry the house, date the rate,
Yeah, exactly.
because I know there are people that are passing up the perfect home for them that just because they're scared of the rate and not necessarily if they can't afford it. Obviously, that's a total different thing. If you
Hmm.
can't afford it, don't buy a house you can't afford. But if it's a house that's the perfect house for you and it's in your price range, but you're just waiting for the rate to drop, I feel like that's where I get that feeling of FOMO from people.
Yeah, absolutely. Everybody wants to get a good deal, whether they're
Yeah,
buying a pair of shoes or a car. Everybody wants to feel like they got a good deal, and an interest rate's the same. And I'm not saying to go out there and find a lender and pay the most expensive interest rate that you can. No,
sure.
absolutely. Shop it around. Shop it around for what is reasonable at the time. 2 and 3% interest, I don't know how realistic that is. I think a lot of people, when it got down to that, when it got down to fours, people were like, this is the best day at work ever. We're never going
Yeah,
to see lower. And then it kept going. You know, waiting for that again, you might be waiting for the stars and the moon to align just
sure.
because there's multiple things that cause that. It's just not a one time thing. And again, waiting for just the interest rate, you might be overlooking what's going to happen in the market too that
Hmm.
isn't going to help
That
the
the
interest rate.
prices may continue
Yeah, absolutely.
rising, even if interest rates, like if
Yep.
interest rates go down, we may still see a rise in prices. So you're getting the same house,
For
about the same house, about the same payment.
absolutely.
Yeah.
Yep. Yeah, absolutely. For just kind of a personal experience story, I bought my house, I think it was 7 years ago.
Okay.
Went in and was never going to buy another house, was never going to refinance, and this was it. This was my forever home. It had everything that matched us at the time.
Sure.
Since then, I've refinanced, I think, what, twice,
Yeah.
because
Sure.
interest dropped a couple of times. I was able to shorten up the term of the loan, pay a
Okay.
little bit more in the monthly payment because I wanted to drop instead of having a 30-year, drop it down to like a 25-year.
Sure.
But I remember the thought going into it, we were gonna get this interest, we were never gonna refinance.
Yeah.
And now I look back at it, I'm like, no, that wasn't the case at all.
Right. Right.
Yeah,
Like times change just a little bit, and then
and
you
it
get to
made sense at the
reevaluate.
time. Yeah,
Yeah.
absolutely made sense at the time. I think one of the times we got down to the loan to value was low enough to where we could get rid of mortgage insurance. So it was
Sure.
like, let's look at it then, let's see if it was worth refinancing and we could maybe get a little better interest rate or shorten up our term and keep a close similar interest rate. So that's what we did is we looked at things at that. And again, we refinanced 2 other times because it made sense.
Sure. That's really cool. I mean, it's good advice for people, I think, because I think we, like what you were saying, we've all gotten so used to these ultra low rates. And one thing, a conversation that I keep having with people is that these rates are not normal, that the
No.
2% is so abnormal, historically. Like in the 90s, when I first became interested in real estate, I was a teenager and I was like, this is cool. And it was like an 8.5, 8.75 to 9.75 was like an average interest rate. And so
Yeah.
that's just kind of what it was. And then we started seeing them drop. And, because of the economic pressures and the things that have happened over the past few years, it went to the bottom. And I mean, nobody wants to see 9% interest rate, but
No, absolutely not. But that's probably, more realistic is what we're seing now. Yes, some people are in the sixes depending on your situation,
sure.
but a 2% and 3% aren't really realistic. And
Right.
to wait on that, I don't think is a good game plan, me personally. I'm not trying to say this to be like self-indulgent and like, oh, you should just buy a house to buy a house because I want you to do it for my business.
Right.
It just facts that if you wait, if you're trying to time it perfectly and you're just going to wait for a low interest rate, you're always going to wait, and that's the
Yeah.
thing. And if you're renting, where's your money going right now? It's not going into
Yeah.
your pocket at all, it's going into your landlord's. And when you do own a house,
Hmm.
yes, you are paying interest, but you're also paying against the house and you're putting equity into that.
Right.
And as far as building wealth, one of the biggest things that can help you build wealth and in retirement is owning a home. One
Yeah.
of your biggest, most people, one of their biggest expenses monthly is their living expense.
Sure.
So would you rather that living expense go towards someone who is building their wealth and paying down on the principal of a property they own,
Right.
or you be paying down the principal on a property that you own?
Sure.
So that's another thing to kind of think about when you're buying a house. You know, I think all that is worth looking into and not just get hung up on an interest rate.
Okay. Well, I appreciate that. Do you have anything else you want to add? I think you've answered all my questions. I feel like we've covered it quite a bit. Do you have anything else you want to add?
I don't. I know this is kind of long-winded answers.
Sure.
I would just suggest, talk to a lender if you're interested or you don't think that you can. Getting a mortgage, I think, is a lot easier than some people think, because it just gets this kind of mystique, or that it's like, oh, it's tough and I got to come up with a bunch of money. It's not as hard as a lot of people think. Talk to a lender, come up with a game plan. Maybe it's quicker than what you would think. Maybe the rates would be better than what you expect,
Okay.
but absolutely worth looking into. And don't let, like, again, interest rates make your decision for you. You should make that decision for yourself.
Okay. I appreciate it. I appreciate you being
Yeah,
here.
no problem.
Awesome talking with you.